Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Friday, November 11th. Happy Veterans Day to all the veterans out there, and thank you for your service. Number one message for the day. Number two, in market video for the day. Let's get into basically what happened today and the movers for the day. Then we will also talk a little bit about a lot of rotation today. It felt like a little bit of a different tape today. And then we will go over the performance for the week. I have put together those the stats for the week. Very interesting to see what areas you could think about if you can. Try to make a guesstimate. What do you think outperformed for the week? Remember, too, this week there was like three different things that kind of happened this week, and a different market throughout. When you look at the performance, for example, for SPY this week, before we kind of get into all of that, remember, we had a nice start to the week, and then we had a down 2% week on Wednesday, which seems like so long ago, but remember, that's really when the crypto mess reached its height and kind of affected a lot of things, kind of a washout on Wednesday, and then obviously yesterday was a big day, and today was we saw some follow through for that. So, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right here. Today felt like a lot of the underperforming areas that really gotten beaten up. It didn't seem to really matter today whether or not some of the underperforming areas, whether or not like they've had good earnings or they had bad earnings. It was just one of those kind of it felt like a reversion to the mean in terms of so many areas getting, just really hit the last couple of weeks. Remember, we just, the week prior was a big week of earnings. We saw a lot of the FANG names, a lot of the internet names get really hit hard. So, a lot of these names came back. So, this is going to set up pretty interesting. I think once this momentum wanes a little bit out of some of the underperformers and names with high short interest, I'll give you kind of my quick philosophy on these names is that, if you've been, for the most part, like if you've been staying out of those names for this year or for a good portion of it, as I have, I'm a trend trader. So the only thing I've talked about really the FANG names is being negative on them. And, I haven't really done a lot of shorting in the FANG names, but I certainly haven't participated in those names to the long side either, other than for like a day trade here and there. So it's hard to kind of like flip the switch and go long those names, because for me, I know that I'm just not going to really play with these names that are in heavy downtrends, even though they were due for a bounce. And obviously the last couple of days was a pretty violent bounce for a lot of these names. But the other way that you can look at is if you're not going to swing trade those names, if you're not going to participate that way, then what you could do is certainly day trade those names. So I will go through in this video a couple different trades that we did, and a couple names that I was watching. But before we do that, let's do a quick 2-3 minutes on macro. So number one, bond market was closed today. That's okay. Bond futures still trade. Not that much of a move. You could see a little bit of the price action in bond futures gave back a little bit of that big green candle. I think that's quite normal. I wouldn't have been surprised if we saw this in the equities too today. A little bit of a give back. That wasn't the case, especially for the NASDAQ, the Qs. But we did see a little bit of a give back in bonds, but you could see they finished off the lows, only down 1/3%. That's not that bad. I still think that bonds could possibly get to the top of value here. This is 125.23 for the 30-year bond futures. That matches up very nicely with the 50-day moving average. That's where I think the upside move gets to for this. Even more interesting was currencies today. Another spill down in the US dollar, I mean, really a heavy move in the US dollar to the downside. I was talking to somebody, the other day and saying, oh, maybe that, I'll put on a little bit of a long in the dollar. I'm like, I personally, I wouldn't. It looks like the trend is broken. And again, I really pay attention to trends. As I just mentioned, I'm a trend trader. When you've got something that is behaving that is above the 50-day moving average for like 6 months, right? And it breaks decisively, you just get out of the way. It doesn't matter what it is. It doesn't matter if it's a currency. It doesn't matter if it's an equity. Or if it's an index. If it breaks a trend that it's been sitting in for a long time, you get out of the way. Certainly, we saw that in the beginning of this year with equities when they started to break down. It's basically, if you can, you try to just get out of the way. But I would say, before I move away from this chart, like this is exactly, I think, what you want. Like if you're worried about, no follow through from equities or, shorts coming back in, I think this gives you a really good sense of the fact that this is risk on. When you see money, when you see this price action to the downside in the US dollar, you are basically saying that there is more of a risk on type feel to the overall macro environment when you see this type of a move down in the dollar. So it is, like we said in yesterday's video, with both the move in bonds, with rates coming down and the move in the dollar, this is what you want to see in terms of macro indicators confirming that something has changed in the marketplace. And so we can kind of begin. So that's just a couple quick minutes. We could spend more time on macro, but I don't want to put you to sleep, especially on a Friday when you've got better things to do. Here's the follow through. So we talked about this. That was the number one question, like that I got towards the end of the day yesterday, was could we continue to go higher? I thought we could, based on those macro indicators as well as the momentum. But up 1%, and a little bit of what I like to always call, a little bit of back and forth action today, shaking people out a little bit. We didn't go straight up like yesterday. Right around 10:30, 11 o'clock, we kind of stalled a little bit, shook things out a little bit, and then a move higher. All right. So where do I think that this could go? Let's kind of go over to the 1 hour chart. We did get above this virgin point of control. I think this was was it yesterday or was it this morning? I guess it was yesterday. So we're above that. So you could use this level here, 39.65, as your support, and say, hey, as long as we're kind of trending above there, you could basically, continue with the trend here. Where I think we're ultimately getting, and probably it's going to be on, so this is the unfortunate thing, is the positive is I think we could get up to the 200-day moving average. I don't know if we get there in a straight line, but I think that I almost prefer that we don't get there in a straight line and we do a little bit of backing and filling. The problem is if we go up there in a straight line, we're going to get pretty overbought, and everybody and their mother on FinTwit is going to be like, aha, we got to the 200-day moving average. And then as soon as they see a red bar, they're going to say, oh, well, that was the end of that. And they're going to compare it to this, right? Just like we saw with the Dow, right? I think some technical analysts, I think, don't have patience. Patience is obviously very much a necessary function or a necessary characteristic of a trader. But remember, again, I point this out because I just saw it so many places. Oh, we got to the 200-day moving average and we had one red bar, and everybody wrote the whole market off, in terms of, this happening. Oh, that's it. That's the end of the rally. And, we sat back here for a couple days, didn't go much further to the downside. And now look at us. And again, I've been pointing this out in so many of these videos because it gets no attention, right? I saw it being posted, 20 different places about being rejected at the 200-day moving average. And I've seen absolute crickets. Once it got back above the 200-day moving average, I didn't see any big technical analysis talk about getting back above the 200-day moving average. Crickets, absolute crickets. I do think so. Today was not the day for Dow stocks, right? Some profit taking, some rotation out of some groups today, but ultimately 345 could be where we get to. Also take a look, start to take a look at now the weekly, we have a weekly closing bar. Notice what we did here, guys. We got back into the value area for 2022. Again, be cognizant of that. Watch this 335 level. If you really want a precise level, oops, I'll turn this on for you so that you could see precise levels in our indicator really quickly. And I'll just allow that to adjust, but it's going to be right around 335. Again, notice that the last time we did get to the value area, we got a pretty good rejection. So yes, I would be mindful of that and be mindful of your support resistance. Very important in trading, very important in technical analysis. I just think it's funny when everybody seems to point out the same thing. It doesn't always work, such as getting rejected at the 200-day moving average, and then funny, nobody coming back and saying that they were wrong about that. IWM we're at the 200-day moving average. Not the most powerful candle, but I think pretty interesting. And if it can continue higher, 192.32 is something to watch. Also, it's going to be fighting with this 200 period moving average on my weekly chart as well. Let's talk about the Qs here for a minute. All right, so the Qs could rally a little bit further before they get to resistance. That's 297. Maybe we continue to see some rotation. I think that for me, it's probably going to be 294 is going to be an area where I think that we could get up to, but then, we'll see if something changes once we get up to that virgin point of control where a lot of volume was previously met previously. Again, where we saw sorry, it's Friday, it's been a long week, but where we saw a lot of volume previously that we have not gone back up to. That's called a virgin point of control. They can act as great resistance points. I'll give you an example. Again, I still can't believe this one. I'm still dumbfounded by this because our indicator still blows my mind every now and then. But here's a good example of what happened to Netflix. Notice that Netflix, right, the price action got up to right into here, into the middle of this gap. Nobody has this on their charts, right? This was the value area, which was based on this big gap down. Now, what we do in our calculation is, we do have a behind the scenes calculation that computes this value area. And if you were just looking at the volume profile or a volume shelf or something like that, people like to put a whole volume profile on their whole chart of a whole year. It's not really the right way to do it. But in any event, if you break it down like this, notice the volume profile here for this part of the price action. Gap down, and notice all the volume down here. If you average that out, here was your point of control. Look at where we tagged this. I mean, if that doesn't blow your mind, I don't know what does in terms of using the market web's volume at price. That's a backbone of what we do at the Tribeca Trade Group. Why do we use it? Because of things like this. There's no other way that level being taken out and knowing where to take profits, and then notice what has happened. Now, of course, we could reclaim this. Now that this has been taken out, it will act as, possibly, another resistance area, but it's not as significant once you pass it the second time. All right, so I just thought I'd point that out as something we were going over that earlier in the week. Again, just amazing to me. All right, so we covered a lot with the index charts. I just wanted to I forgot to bring up the weekly chart of the S&P. 4071 is going to be a significant area, and that may be something that we get to next week. Let's talk a little bit about some of today's movers. So yes, there was a lot of rotation out of things, and I'll give you an example of why I got out of XLV earlier in the week, right? This is the healthcare ETF. Why did I get out of this earlier in the week? So if you go, I think this was Wednesday that I may have gotten out of this, and I hit several targets in this, but as I communicated, that there were too many names that have gone up too far, right? When you see something like this, what happened with Merck breaking out to new highs, when you see something like Bristol Myers, hockey stick pattern, right? Now, again, look at what Bristol Myers did today, up, down 4.3%, but just up in a straight line. Gilead, right, was another one. These were great performers for a couple weeks. Now, Gilead actually still did pretty well, but look at the move: 66 to 81, acting like a crypto. In terms of the momentum that some of these things. Look at a CAH, for example. Again, really getting hit the last couple days because it's been where money has been hiding out in this in this environment that we're in. Another one that we've talked about, McKesson. Look at what happened to McKesson today, right? Down 3.8%. But again, these, look at the, if you've been in these stocks for this year, you've done a really great job because you've avoided all the mess and the losses of everything else. Then if you look at some consumer staple stocks, like look at what happened to Hershey the last couple of days, right? Another, area that's been acting very well, right? Quickly, all the way down from 240 down to 218. So there was this, today was different than yesterday, much more rotation, out of some of these overcrowded places where people have, funds have been, hiding out in, and avoiding the interest rate as well as the stronger dollar. Also aerospace and defense stocks. Now, this may have something to do with, I read a headline or two about Ukraine advancing in the war with Russia, but look at what happened to the defense group today. Now, again, they took out one of these version point of controls, which is a clue to basically say, hey, take some profits. But this was also right on a day where the Qs were up, almost 2% for the session. You saw aerospace and defense go 3.4%. So I don't think today was an easy day, depending on what you were holding. If you've been in these stocks, you've done a good job this year. But at some point, what happens is when interest rates really move and when the dollar really moves, it could really cause this big rotation that happened, under the hood. So it's not easy. I would say when you've got these types of rotation. Look at the managed care stocks today too. UNH, which came off the lows pretty nicely, still finished down 4%. Again, managed care stocks have been acting great this year. So again, you got to be aware of the rotations that are happening. FDN, right? That's the internet ETF, one of the worst performing areas this year. So again, gets, finally like a big bounce in this. Really not even any major technical, thing to kind of look at that's anything great. So again, let these names, and again, you could day trade them, but let them bounce. We know that stocks don't go down up in a straight line. It's good for this group to do that. What I really liked this week was the semiconductors. Yes, the semiconductors were the best performing group this week. It is, I think, a good sign to see the semiconductors move up like this. Now, they're not even above their 200-day moving average, even though they were up like 14% this week, which is pretty crazy. All right, but there were some star performers. The star performer, again, that you may have found, AEHR, right? This was on our watch list going into the week. I did play this name, was up 24% for the week. Interesting, some of the names that we had in here really kind of backed off. Like NOC was up at this point, was up this week. BAH was another one too, that, even though BAH, I mean, look at that move this week, right? So that might set up in a couple of days. Let some of these names that got really hammered with profit taking and rotation out of, let them kind of recoup for a little bit. They might set up again because, again, they're in uptrends. But yeah, I mean, that's a pretty aggressive move to the downside for something like that. So this was previously, and again, this is something, this is from this weekend, but this was something that, this was up to 112. So again, it's one of those things where, you have to be an active trader right now in this market. You cannot get comfortable in anything. It's just the environment that we're in right now as things change and flip around. But again, much different than yesterday. In terms of, so let me move on because I don't want to make this video that long. What did I trade today? I did take my profits in a couple things today. AEHR. Yeah, so I just showed that one. I took profits. Like I said, it's been a long week. I'm a little bit tired from this week. So that's one that worked really well this week. LTHM, look at this thing, all the way up to, 35, almost 36. Again, one of these things where I was happy. I took some profits along the way and it kind of really backed up. I took a target at 34 and then I took this trade off at 35.50 before it had one of these. I'll tell you, this was also really tricky. I was looking for, I saw the move in copper this morning. I was looking for names in the, look at what copper did today. Up 4.8% today. That's just a huge move. But I mean, these moves were crazy. And they moved so fast. Alcoa at one point was up 10%. This again is on the back of, stuff that's going on, possibly with Russia. There was a story out about possibly the exchange is not going to kick off, I guess, aluminum. Is what they're looking to do. But look at how fast this move was this morning. So just to the first half hour, like a 10% move in Alcoa, right? Not every trade for me was perfect today. I was looking at Nucor because I thought it was a cheap name. I thought we might see this group go a little bit today. And it's a cheap stock, but the market didn't want cheap stocks today. They wanted things like DoorDash, right? Which was up 6% today. Things like Shopify, DoorDash, I played this for a day trade, right? DoorDash actually had some pretty good earnings to it. So I just thought it might catch some momentum. I played a little bit of Square today, right? Square had a nice move. I think Square could actually go a little bit higher here. The chart looks pretty good. This is more of a growth theme that I would maybe watch next week. Again, remember, they had decent earnings. 200-day moving average is all the way up here. Again, but I would only be looking at this for a short-term trade, nothing much more than that. I mentioned Square. What else did I trade? I traded a little bit of NVIDIA at the end of the day. I think that this can continue to rally until its earnings numbers. Remember how a lot of times these trades work. It's buy the rumor, sell the news. Sometimes newer traders are like, oh, I'm going to play it for earnings. Why not just play it now? It's already made a move from 140 to 163 without even knowing what the earnings are. Who cares about what the price action is going to be on their earnings? That is the difficult thing, right? So sorry, not who cares, but why do the difficult thing? Just trade it into earnings and then take the thing off. Newer traders, they love to try to guess what's going to happen on earnings, and they want to say, oh, they want to play that game, right? It's the unknown. That's the hard trade. The easy trade, just ride it into the earnings, then take it off on earnings day. Then you can wait and see if they have a good earnings, and then of course the trade will be there, once you come back, right after the earnings print is over. Okay, but again, still. What I liked about NVIDIA and why I put it into the TTG trend portfolio a couple of weeks back is because it found support, right, at this bottom of value. Tesla's another interesting one too. While Tesla's going through all this stuff and Elon's his focus is on Twitter right now, for the long term, I'm not saying for a short-term trade, but you do have a support level like we had in NVIDIA. And I would be really interested to see if we can hold on to this 185.87. The other thing with Tesla, and the reason why it's still not doing what everything else is doing, is because of the situation with Elon and where his focus is. But Tesla is still very expensive, right? But it's not as expensive as it was. You're looking at like a 60 PE. All right. What else did I want to go over? Shopify, I would be taking, even though we saw a boatload of calls today in Shopify, notice where this thing stopped today, right at the point of control, right? So again, that would be a place, in my opinion, for one of these momentum growth names to be taking profits right at $40. If you're a big bull on NVIDIA, on Shopify, I would wait to see if it could get over that $40 mark. Well, I think I should be ending the video at this point because you could tell I'm kind of screwing things up here as we go along. One other chart. This is a name that I got long yesterday. I talked about this on Bloomberg TV. It's kind of right in the middle of having something a little bit higher beta. Had a nice up 2% move today, and I think it gets up to 88. I like this move back above the 200-day moving average for biotech. Here's the week's performance. SPY up 5.9%. Again, Q's had the big outperformance, even though, underperforming on Wednesday pretty decently. EEM was up 5.4%. IFA, that's international developed markets, were up 8% for the week. Bonds were up 4%. Gold up 5.2%. The dollar was down 3.4% for the whole week. And growth really excelled, up 9% was the for the growth ETF this week. Semis outperformed. Gold miners was your second best. Internet stocks, home builders had a big week, up 12%. Tech had a big week, solar as well, and so on and so forth. Of course, the blockchain stocks did not do well this week. They were your laggards. Also, a lot of the defensive, utilities, healthcare, energy, which I think, by the way, this is maybe where we'll leave things. I was kind of looking at this, but again, I'm still worried about the Ukraine. We want obviously Ukraine and Russia for this conflict to go away, so we don't see any more loss of life. But you have to think about it too. If you're long energy stocks, and that's been the risk all year, for the last 3-4 months. For longer than that, is that if that conflict, does get, does go away, and they have some type of negotiations, probably energy stocks are going to come down a little bit. One name I was watching was Hess. I also traded MPC in the beginning of the day, and I took profits on it. I just don't feel comfortable right now sitting with this group right now, but you could see out to new highs. Again, I always go to where the strength is. I think OVV had a nice day today too. That's a pretty interesting energy stock. It was up almost 7% on the day. Very, very strong. MTDR is another one of my favorites in this group, which was up about 3% for the day. We'll finish it here for the week, guys. Don't forget, if you're interested, I do have a special for new members. You could go to my Twitter page. I will tweet this out again, but I did tweet it out earlier. Here's the coupon code. Here's the link. Get involved. It's an easy way. This is 25% off for the last 2 months of the year. Of course, it's 2 full calendar months, even though we're starting this at the 11th of the month, but you'll get 2 free. You'll get 25% off your first 2 months, right? And then things will continue as normal after that. But I think if you have not tried Tribeca Trade Group, that's a very easy way to check us out. Again, what we try to do is be ahead of the game, find where the trends are, find the trades ahead of everybody else. I try to provide really good macro analysis as well, and really keep an eye on the tape in terms of what's going on. And then we try from time to time to kind of find your option activity. That's really, when I see something that's really interesting. TH was something that I thought was interesting today. This is Target Hospitality. We saw a decent sized call buyer. I took this trade, right? It has to line up with my system, and I do like the technical, the technicals here. That's often when you see me take option activity, is when we do see when we see option activity and it's a really good chart setup, which I think this is. Also, remember early in the week, I think kind of what got lost was all the calls that we saw in the semiconductors. SMH saw a boatload of calls going up in December. That was also a really good signal, speaking of option activity. So sign up there. And if you have any questions, certainly you can let me know. Just reach out to me on Twitter, or you can email me. Guys, have a great night and have an awesome weekend.